inflation here, because we've seen a couple of numbers come up, and we saw the CPI come up last week, which was hotter than expected, and everyone was saying, well, it was expected to be hot, but now we're looking at a lot more numbers are coming in, right? So we're seeing import prices up 10% year over year. PPI numbers were insane, right? So producer price index. And now we're seeing a lot of companies talk about this as well. And I guess the question I'm going to pose to you is this priced into the markets? A lot of people believe this is priced in. I don't think it's priced in. I'm going to explain why and have details why it's not. But what do you think?
Well, give me some more detail. What do you like inflation continuing at these same paces? Because some of those numbers that came out today were a little lower from their peaks, which is kind of the market's kind of taking that in stride, right? Mm-hmm. I don't have that right in front of me, but I remember seeing some headlines, hey, this is good because it's down a little bit, but we're still talking about very elevated. I think the market is pricing in higher inflation for the longer term. Yes, I do think that that's there. We can get into interest rates and how much we think that'll apply. But yeah, for the most part, I think people are gearing themselves for higher prices across the board as the new normal.
And that's the thing. We're all expecting higher prices across the board. For me, I'm expecting much, much higher prices, and I think the Fed is really, really has to be nervous right now. I mean, you're looking at lumber prices. I don't know if you were paying attention to lumber prices. So since 2010, prices average around $300, $400, and in 2021, prices surged. They peaked in May at $1,700, which is insane, right? $1,700. It was like, oh my God, look at lumber, and then they collapsed. And from May to December, they went back to the 450, 500 level. Today, they're back up to 1,300. So they doubled in 10 weeks. I'm going to bring up a chart here. So if you're watching this on a Curzio Research YouTube page, you'll see it. If not, I'm going to explain everything. But I wanted to bring this up. And I mean, this is incredible. So this is for the year, Daniel. Okay. And I have this up. So this is this year, right? So we're in February, right? Mid-February. Crude oil up 53%, natural gas up 40%, gasoline up 50%, heating oil up 56%. I mean, you're looking across the board. You can go ethanol, you can go propane, uranium, methanol. But I mean, the prices that have gone up this year, and then you're looking at lumber, you're looking at import prices. We know it's not transitory, but I thought we would be seeing more of a decline here, and we're not. And retail sale numbers came out, and they beat pretty easily, but it wasn't broken down to where are they selling more products, or is it just because they're selling at higher prices? And I really want to see that. So, when I look at the full picture here, I think the Fed is incredibly behind the curve. I think 50 basis point hike next month is a guarantee. I think we see another 50 basis. I mean, we have to go 100 right away, and we'll see. But for me, I love the argument with people saying, well, the Fed, they're not going to do it. They're not going to crash the markets. It's not a choice of they're not. They have to now. I mean, that's how much money they put into this system. It's resulting in runaway inflation to the point where, there's two companies, a bunch of companies have come out, but you're looking at Heineken. Heineken came out and said it's going to be hiking prices to offset significant and off the charts inflation. But the company warns this could lead to reduced beer consumption, right? This is whatever product you're talking about, right? So you're going to raise prices where people are going to be like, oh, I'm not paying for that shit no more. So he said there's no model that can handle this kind of inflation. This is what they said. It's anyone's guess what the impact is going to be on volumes due to all the price increases. Burger King said, listen, the Whopper is off the discount menu because they're looking to raise prices, offset inflation. We're still seeing supply issue concerns, which is a direct result of inflation and demand and huge demand. Where Intel CEO, that's Gail Singer, said the company expects the supply of semiconductor wafer to remain tight at least, I haven't heard this forecast, at least through 2023. What happened to, remember Ford and remember GM? I mean, 6 months ago, we're seeing it get better. Then all of a sudden Tesla comes out and says, nope, we're not seeing it get better. We saw Under Armour, which is a position on our portfolio, come out and say, hey, it seems like these supply chain issues were supposed to ease, and it looks like they're starting to get a little worse now, which is, surprising to me. For me, we're all anticipating inflation now. We talk about it every day. It's just how far would the Fed have to raise to really control this, because we're not seeing this tail off as expected. And we may see that, but that's what has me worried with some of these stocks, and especially growth names. And we can talk about, some of the growth names that have gotten hit. But, I just see rates continue to rise. I think the Fed's well behind the curve, which I think most people agree. But I think, Goldman just went from 3 rate hikes, I think, in December to 4 rate hikes in January, and now they're expecting 6. I mean, we're talking about months. We're not talking about, 5 months past. We're talking about just, 2-3 months past. That's huge. So now we're looking at rates much, much higher, which is going to be significant.
It will. I will take the other side on the argument of the Fed. And I'm not saying you're accusing me of this. I totally agree with you on them being behind the curve. I think that I do think it's priced in. They're going to raise by 50 basis points so 0.5 instead of 0.25, as they were expected a couple months ago. Where I disagree with you on saying they don't have a choice. Frank, you need to lower your standards and your beliefs in humans. You always have a choice, and you can always choose to do the wrong thing, okay? So let's say they should pick a number 7 times. My point is that I just am not sure that they'll follow through. I hope I'm wrong on that. I just don't give them the benefit of the doubt like I feel like you're doing. Yes, they should. Yes, they should increase tonight. They should do an emergency meeting. You've had a couple of Fed guys on different TVs talking about how their credibility is on the line, which is beyond funny. How you can say that with a straight face.
Bullard came out and said 100 base point hike right away.
Exactly. But again,
not one meeting, but over the next.
And I'm not accusing him of not being vocal and whatever. But my point is that for them to talk about credibility being on the line now just shows you how out of pace they are and how out of touch. So. Yeah, we have to wait and see, like the supply chain issues. You had Triton, is it one of the container ships? Now I'm second guessing that. But they even said that supply chains on the container level will ease in the second half of this year. That doesn't mean, like you said, Under Armour is still warning about it. Everybody else is still warning about it.
Someone doing a good job, right? I'm not saying they're not, but I'm just surprised that companies that haven't won before, well, Under Armour was going through this great, and other companies, and Nike was warning, and Lululemon a little bit, and those companies that have done well, but Under Armour seem to be managing this, and they said inventory levels have never at the best levels since in a decade. But now Tesla warned, and now you see other companies just starting to warn for the first time. It's just, and it hit those stocks. So to me, it's surprising. But I want to explain really quick of why this is a big deal. And excuse me for a second. That's my cold, but I'm not going to miss the podcast because of that. So I want to explain this, and Daniel's laughing as I'm coughing. So mortgage rates, right? Let's take mortgage rates. So mortgage rates have surged. The 30 is over 4% now, about 4.15. I just yesterday got approved for my loan.
Hey, finally,
Congrats. They told me probably about 5 times it was a done deal over the past 4.5 months. So
let me interrupt, not to spill any beans here, and not to eavesdrop, but man, Frank has been at the office. He's been through the ringer on this, so I'm sarcastically laughing, but good. I'm glad it's finally done. Are you sure it's finally done, or is it one of those hey, wait?
My closing is next week. Fine. This is a construction loan, right? So it's a construction loan where you pay interest on it first, and then it rolls over into a 30-year, 15, whatever I want to choose. So I locked in, which was a good thing, and this is why I kept with this company, because I've never seen this process take so long. 4.5 months. So much so that they had to run my credit twice for the same loan. I've never seen that before. They probed me as if I was Bernie Madoff. I mean, they just kept asking for information, all the information that you would expect. But then as it went longer and longer, they asked me to resend all that information, to update it on a monthly basis. I'm like, guys, I need to know what's going on. I provide all the information. And it took an incredibly long time. And for me, I couldn't say, hey, F off, because I'm locked in 325. And that was only 4.5 months ago. Now it's over 4. And that's a big deal. And I want to talk to you about that, because when you look at a mortgage calculator and say you have a $500,000 home, you put 20% down. Just say, using those numbers, right? So it's a $400,000 loan. At 3.25%, which was 4 months ago, that amounts to about $2,000 a month. If you use the same metrics, but change the rate to 4.15, what it is right now, that's an extra $200 a month, right? So $2,400 extra a year coming right out of your pocket, simply because, rates rose over a 3-4 month period. But that's today. I could tell you, they're going to 5%. And when they go to 5%, and you plug that into the calculator, now that's $2,400 a month. So that's $400 extra a month. Now you understand, that's just through a mortgage rate, right? So now you're looking at all loans, people borrowing money to grow their companies, all this leverage that's in the marketplace that you could borrow for almost free. That's going to change. And that's what you're seeing, even for people trying to pick off growth stocks right now, Daniel, where, I said Roblox was a strong buy. It's one of the best companies in the metaverse. They just signed, who signed with them? It was Nike and the NFL, right, to build a metaverse. They're going to have tons of companies signing for them, but they warned and said, we're seeing not the expected growth. The quarter wasn't terrible. It wasn't terrible. Still growing 35% and massive market for them, massive market. So in terms of the total addressable market where they can go with this, but the stock fell 20%. Yeah. And that's what you have to worry about, because if you have a growth stock and they just miss a little bit, you're done in this market. You're not going to, there's no forgiveness in saying, oh, this is one quarter. They did that with Disney and said, oh, you know what? Forget about them earning this in 2022. They're going to earn that now in 2023. I've never seen that ever, but it was just funny. Oh, no, we're just going to push everything out and maintain all of our numbers. They're just not going to be this year, going to be next year, right?
Yeah.
Which is kind of funny when you think about it. But, you know, for me, I just don't feel like this is priced in like a 5% 30-year and the Fed, you know, raising super aggressively. And again, you and I will disagree on this, but the Fed's not going to have a choice. They can't say, oh, you know, they're not going to do the right thing. They have to. Like right now, they were saying they try to push it. Remember, 2% was the benchmark. It was 2%. We're going to raise rates. With 7.5%, you still haven't raised them, right? So it's incredible. Still flooded the market with money over the past year, even though earnings are at record highs. Everything at record high, all asset prices, household net wealth is at record highs, everything at record highs, right? And you still kept flooding the market with money. Now you're going to be taking that out. The Fed's stuck in a tough place, and you're hearing, like you said, I mean, a lot of these governors are coming on and they're saying, listen, we're really behind the curve here. Maybe it's factored in. I mean, stocks are doing relatively well right now, but I don't know what the upside is here, because you know, maybe we see inflation subside and that could provide upside. But I think, like, if you're looking, you know, where's the next move going to be? It seems like it's going to be the downside to me. And I hope I'm wrong on that, because I know most people are long stocks.
I understand that. I want to ask you a little bit of clarification on the housing thing. So those are great numbers, by the way, and I believe that. The $200 a month, I don't think is going to deter anybody on buying a house. I think that the tailwind... Boy, do I want to get off topic on the mask mandate thing. We'll talk about that in a minute. I think the tailwind and the momentum behind housing is very strong. And I was talking to a business owner out in Arizona who does custom pools and landscaping and things. And you know a little bit about this, going through the housing project or the home builders thing, and you know, you're going to do your backyard or however you're going to choose. The market for those, everybody on the lower income side, and remember real quickly here that the gap between rich and poor is influenced by the Fed, which is why I have no faith in them, Frank. $200 a month, I just don't think is going to, I don't think people are that up against the red line to where it's a make or break. No. $400, I think that starts to get attention, but I'll even offer, I don't think that's going to deter anybody. I think that the idea and the mentality of people getting out or wanting to move and have their own home is so powerful that'll do it. And to your point with lumber prices recovering, yes, they peaked and then fell and now they're back on the rise. I would really, if you see the headlines around mortgage rates rising, causing Toll Brothers and different housing stocks to fall, I would really have a watch list ready to buy on those, because I do think that that's strong momentum. I don't think those increases on the monthly side are big enough yet.
Yeah, and just to
I'm not saying you're saying, hey, sell housing stock. I'm just simply,
I'm not saying sell.
That's
housing
a lot of good stuff.
I'm not saying sell housing stocks at all, because you know, even from my builder, I said, you know, how's business? So you know, rates rising. I just met with the design center like last week, and they said we're more busy than we've been in the history of a company.
Absolutely,
and I've heard that from several builders. So. When does it matter? Right now, I could see it not mattering, but it's all about sentiment, right? Because now if you're looking at your portfolio, and a lot of people's portfolios have gotten hit, right? Because you had aggressive stocks in it, and even though the market's doing okay, still NASDAQ, I still think is more than 10% off its highs. You probably have stocks that are down 20, 30% in your portfolio that got nailed. Even good names got nailed. So when your portfolio is going down, all of a sudden you're looking at your net wealth and going, wow, it was worth this, and now it's not. And then you get interest rates going up. There is going to be, you know, a point where you're going to be like, holy cow. You know, I mean, gasoline prices, I was paying, you know, in Florida, it was, you know, $2.80 and it's $3.60 now. So, you know, it gets to a point where you're like, holy shit, you know, where you see these prices. But, you know, for that, I don't think it's priced in. A lot of it, where the market is, says it's priced in. I hope I'm wrong on that, but I want to see inflation subside. We're not really seeing that. We're not seeing supply chains get eased, which we expected months ago. Now Intel's like, we're going to have problems with 2023. You know, the car companies are not saying that. That's telling you that most EVs aren't going to be launched in 2024. There's supposed to be 53 that come out this year. There's no way that's going to happen. They're going to talk a big game, and they're going to say, well, orders are through the roof, because people have to put like $10 down to buy freaking EV just for now to lock it in. But at the end of the day, you're going to see other EVs coming out, and you're going to be like, you know what? I'm going to take the $10 back or the $100 back, and this is available now. So, you know, there's going to be a huge race out there, and, you know, there's going to be winners and losers there, but not everyone's going to be a winner in that industry.